Colin, you are one of the most bullish names on Wall Street right now. I think your price target is $1,080 for Tesla.
And what we saw last night was that they're preparing for full autonomy in terms of the user experience within the vehicle, and that's important to see them migrating towards that full autonomous experience inside the car.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So here on Solving the Money Problem, we're an equal opportunity investment channel. That's why I like to bring you guys and girls opinions from both ends of the analyst bell curve. On one end, we have Gordon the class clown Johnson, and on the other end, we have top-ranked analyst Colin Rusch of Oppenheimer, who is literally a top 0.1% analyst according to tipranks.com. So with that said, let's see what Colin Rusch has to say about Tesla, why he believes the stock is headed to $1,080 per share, his thoughts on the Plaid Model S, autonomy, and volatility around Tesla stock. So let's get into the video. And by the way, since I know there's a lot of crypto lovers watching and people who like free stuff, it's your lucky day. For a limited time, you can get up to $250 in free crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. It also helps out the channel. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $250 just for opening an account. And if you fund your account with $100, you'll get a second free stock valued up to $1,600. Unless you don't like free stocks, that is. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Tesla debuted its Model S Plaid last night at the company's headquarters in Fremont, California. Tesla is touting the car as the quickest production car that has ever made and has already begun deliveries. Joining us right now is Colin Rusch. He's Oppenheimer Managing Director and a Senior Analyst. And Colin, you are one of the most bullish names on Wall Street right now. I think your price target is $1,080 for Tesla.
So just to give you guys some context, we're now looking at Colin Rusch's profile on tipranks.com. We can see he's ranked number 6 out of 7,547 analysts. Not bad. Of course, this is only over a 1-year period, so, let's test him out. Let's stress test Colin. How about over the last 2 years? Oh, he's ranked number 5. Well, okay, cool. So generally speaking, Colin is relatively credible, at least in my opinion, as compared to most of the other analysts out there being tracked on tipranks.com. Basically, Colin is the polar opposite of Gordon Genius Johnson. So let's see what he has to say. And by the way, look at this. Average return per rating. Incredible. And by the way, Colin covers a shit ton of stocks, okay? It's not like he's just recommending buy Tesla and that's the only stock he's covering and has a great success rate on that. I mean, that'd be fine as well. Great track record. But the fact that he's covering so many different stocks and has such a great track record really lends credibility. I mean, Colin is up there with the best of the best.
Did you see anything last night that makes you more sure of that, or what are you thinking at this point?
It's important for this company to maintain its leadership from a technology perspective around the drivetrain and as well as the product design. And I think they demonstrated that well last night. Our price target really is based on their ability to really deliver autonomous vehicles. And what we saw last night was that they're preparing for full autonomy in terms of the user experience within the vehicle, and that's important to see them migrating towards that full autonomous experience inside the car between the back seats, the display, and some of the other features within the display, preparing for folks to not really have their hands on the wheel going forward.
It's a pretty car, and it's pretty impressive, the things that they're saying it can do, going from 0 to 60 in under 10 seconds, in under 2 seconds, I should say. And also, it comes with a pretty hefty price tag. You're talking about $120,000. Just wonder what that means in terms of sales. Is this something that's really going to add to the bottom line, or this is, like you mentioned, just about leadership?
I think it's really about leadership and demonstrating, support for the brand. The Tesla brand, I think, has been really powerful for the company in terms of its leadership in electric vehicles, and they need to maintain that position. You've seen any number of examples as a company grows, that its leadership around the brand and kind of exclusivity starts to fade a little bit. And so having a vehicle like this that folks can aspire to really is important for them to maintain the quality and kind of the exclusivity of that brand going forward.
Couple of great points here from Colin. First of all, I completely agree. I think it's very important for Tesla to continue swinging around the gigantic engineering dick and turkey slapping everyone who even thinks about competing with them on anything that actually matters. And by the way, range doesn't matter. Now, why do I say that? Any idiot can put more battery cells in a vehicle and then get more range out of it. What really matters, if you want to get down to the specifics and be picky about it, is range per kilowatt hour in your battery pack. I really want to stress this point. Any automaker tomorrow, if they wanted, could make a 1,000 mile range electric vehicle. It would just need a ton of batteries. That's not impressive. What is impressive is squeezing out an enormous amount of range for a small battery pack, or what's even more impressive than that is insane acceleration, is insane top speed. These kind of metrics, okay? I really want to stress this point. One particular brand at the moment, Lucid Motors, who are attempting to troll Tesla before even having a vehicle in production about their 500 mile range, and we all know that that's actually not an impressive feat. Some of the numbers matter, some of the engineering feats are very impressive, some aren't. And the second thing, Colin identified, as I also mentioned in recent videos, that Tesla is really preparing for full autonomy. That's why they've got the gaming within the vehicle, the rear screen and the front screen, the ability for people to game wirelessly from any seat in the vehicle, including in theory from the driver's seat as well. So Tesla's definitely preparing for autonomous vehicles. This is very, very bullish.
Tesla shares were on fire last year, but if you look at this year, they're down about they're up about 15% year to date, down 15% year to date, which trails the S&P 500 and the Dow. And if you're looking at just what's happened from the 52-week high, they're off by about 33%. What happened? Was this a stock that pulled a lot of performance forward, or what else is the street waiting to see right now?
Yeah, I mean, so we cover a lot of names in and around the climate space, and we saw just an extraordinary run last year, really through the end of January into early February. It retraced as the 10-year started to increase the yield. We went from 0.8, 0.9% yield to 1.5, 1.6%, and so you saw some of these growth names really retrace, which I don't think is unusual. And the climate names really retraced as well in that environment. So a big part of this is just the market figuring out the relative valuation for growth in an environment where you've got very affordable capital available. I think we've hit a digestion period here for investors where they've digested what's going on with the climate technologies as well as the COVID environment and how we're going to move going forward. I think as we get into the better part of the summer and into the latter part of the year, and we start to see some of these companies really see the supply chain balance out and see who are the real leaders in this area, you start to see growth and stock appreciation again within the group. For Tesla, again, I think this is really about autonomy. At this valuation, you really have to imagine that this company is dominating both the production side of things, but also really leading the user experience, which at the heart of it is going to be the autonomous vehicle technology that they're bringing forward.
But Colin, at $1,080, your price target is way, way above where it stands right now. If you think that's still realistic for a price target, you must think that there's still a lot of volatility that will come in this stock.
Absolutely. This group has been up and down and all around, and I've been doing this for over 13 years now, and there's never been a straight line for anything within this sector. And so we do expect a fair amount of volatility.
I definitely agree with Colin on this point as well. Tesla stock is and will continue to be volatile for some time. I've made videos about this in the past. Kind of comes with the territory when companies are disrupting entire industries and riding on exponential technologies, including artificial intelligence, battery storage, and more.
And there's a lot of leapfrogging that's going to happen in terms of the technology development. But what we saw last night was that Tesla really has, continued to push the envelope in terms of the technology and the engineering, and the motor that they've developed, the integration of some of the new features is really pretty impressive at this point, and it's really something that none of the other automakers can lay claim to. So we think this still continues to move forward, and that the Tesla engineering, while they burn out some folks, are really making tremendous progress that a lot of folks are following at this point. And these guys really are leading the field by a substantial margin at this point. I really think it's going to be incremental progress on fulfilling the vision. So deliveries are going to be an important step for everybody to make sure that they're on track. I think it's becoming less important, what the actual number is, as long as they're just making progress.
Surely I'm not the only one that noticed that funny graphic. CNBS, what is going on here? It's almost like they're trying to paint a negative picture. Tesla earnings, minus carbon credits, minus Bitcoin. Like, do they do this for other companies? Have I just not noticed it? Smells a little bit like FUD. I mean, it's probably got nothing to do with the fact that the largest advertisers on CNBS happen to be automotive companies. So I don't know why they would put that graphic on screen. Let me know in the comments below. Why the fuck is that currently up on the screen while Colin's talking? Nobody asked for this information. They're not talking about Bitcoin. They're not talking about carbon credits. I'm confused. Well, not really confused.
And the second thing is really, in our view, the introduction of urban driving functionality within the ADAS system. As they roll that out and allow drivers to make more left-hand turns with their hands off the wheels, that becomes very important to fulfilling the vision of full autonomy out on the road with these vehicles.
Colin has hit the nail on the head with this point. Once Tesla rolls out their full self-driving beta, and it's no longer beta software, but it's available fleet-wide, this is a hugely positive catalyst for Tesla stock. However, the question I have is how long until the stock market reacts? Is it instantaneous? Does it take a few weeks? Does it take a few months? It's unpredictable, so I've got no idea. Let me know in the comments below what you guys think. How long after Tesla deploys full self-driving beta fleet-wide and takes it out of beta release before the stock market has a strong reaction to this news?
This was a major step forward, with the 0 to the 60 under 2 seconds is an impressive feat in a production vehicle. And I think it more than meets the needs of the company in terms of evolving the product portfolio.
Colin, you said that this is a major step forward for the company. Any concern at all that they canceled the Plaid Plus? Or can you give us any insight as to why you think that decision was made?
I mean, honestly, I don't know why we need to go faster than 0 to 60 in 2 seconds or go 200 miles an hour.
That's a good
I'm not sure what else they offer consumers at this point. It seems like an unnecessary element that they didn't need, and so they took it out. And so for us, it's really not a concern at all.
As regular viewers of the channel will know, I agree with Colin on this point as well. The Model S Plaid Plus turned out to be completely superfluous. At most, it would have shaved fractions of a second off the 0 to 60 time, maybe had a slightly higher top speed, but it's totally unnecessary and superfluous when the Plaid Model S alone has world record performance. Now, a few people might want to nitpick in the comments talking about the range, but as Tesla pointed out, the data shows that 400 miles, give or take, of range is more than enough for practically every use case, and Tesla isn't in the business of making products to suit the exception to the rule. Now, just to be clear, if Tesla were to cancel the 500-mile Cybertruck, that would be a disastrous decision. Now, why would that be the case if they cancel the 500-mile Plaid Plus? What are you talking about, Stephen? Are you high? Let me explain why. We'll use some technical terms here. The Cybertruck is designed for towing shit. When you tow shit, you lose range because you're pulling more mass around. Therefore, it's important for a vehicle that is designed to tow shit to have a longer range than a vehicle that's not designed to tow shit, just so that when you're towing shit, you have an acceptable range anyway. All right, let's move on.
We saw the Tesla stock take a hit off of those numbers that came out of China. Various reports saying that they've lost market share there. Of course, they can export to the rest of the world, but is that a concern for you, and how does that fit into your valuation model?
For us, short term, the company really is meeting demand as well in excess of supply. And so if they have a little bit of a PR issue in China right now, I'm expecting them to have shipped a number of vehicles outside of China from those facilities. I'm not sure that it's actually impacting domestic demand all in. I do think that the company has had very sporadic month-to-month shipments in different geographies, and so we know that they've starved certain geographies and fed them in various kind of lumpy ways as they're able to get container ships to the given locations. And I think that's probably what we're seeing. Historically, we've seen the company deliver almost half of its vehicles in the last month of a quarter. And so we're really watching what the June numbers will ultimately be, and we'll see where those shake out here in a few weeks, just after the 1st of July with the delivery report.
I just want to take a brief moment to appreciate Colin Rusch for actually knowing what the fuck he's talking about when it comes to Tesla, and in particular, Tesla deliveries. There's so many Muppet supposed analysts out in the media there saying that demand is collapsing because sales in XYZ market have absolutely collapsed month over month, failing to at all take into account the fact that Tesla ships vehicles to different regions at different times. They come on big container ships, and as Colin pointed out, the majority of Tesla's deliveries tend to happen in the last month of the quarter. So congratulations for Colin for A, understanding what's happening, and B, actually articulating it.
Colin, we have shares trading just around $607 today. You have a price target of $1,000, $80 on the stock, about 400 from where we are. What's going to get us there?
Our thesis from here is really about Tesla, delivering on the autonomous opportunity. They've got, by the end of the quarter, they'll have nearly 1.5 million vehicles on the road, collecting data, informing their AI, and improving the system. We think that's a critical advantage versus all their peers that are working with still thousands of vehicles and single-digit thousands of vehicles.
Let's just take a pause here because this is an incredibly important point from Colin. Once again, demonstrating that he actually understands what he's talking about. Tesla has an army of around 1.5 million vehicles on roads, each collecting data and training their neural networks, their artificial intelligence, to get even better at autonomous driving. Meanwhile, the closest competitors, and I use the term competitor extremely loosely in this case, at most hundreds, maybe a few thousand vehicles on roads collecting data. I mean, multiple orders of magnitude difference between where Tesla's at and their so-called competition. Oh yeah, and by the way, their so-called competition actually has to custom build cars just for getting out there and deploying on roads autonomously, whereas Tesla, every time they sell a vehicle to customer, comes equipped with an entire sensor suite that's automatically collecting data to train their AI. If just based on this information alone, you're unable to infer who's most likely to solve autonomy first, you're a lost cause. And
when you look at Tesla's competition, and they have quite a bit of competition now, but especially from the legacy automakers, GM had a big push for EV earlier in the year. Ford had one within the last month, and Volkswagen. You look at all those stocks, and they've been outperforming most of the EV plays over the last month or two. Is this a threat for Tesla? Because they are better capitalized and they have bigger factories and more resources right now.
Oh man, this gets me every time. I don't understand how people don't understand. Legacy automakers are encumbered with equipment, robots, technology, engineers, factories designed for making the soon-to-be extinct internal combustion engine vehicle. You don't just press a magic button and suddenly you can start pumping out electric vehicles from these same factories with the same equipment, the same robots, and the same engineers. It doesn't work that way. Being a legacy automotive manufacturer is actually a major impediment. It's much better to be a fresh, clean startup with a blank slate than an existing automotive company. Yes, they have some manufacturing experience. The tiny bit of that stuff's going to translate, paint shop, those kind of things, great. But the moral of the story here is being a legacy automotive manufacturer with tons of factories, lots of robots, lots of experience making internal combustion engine vehicles is actually an impediment, an obstacle to becoming successful in building electric vehicles. The only thing they have going for them is if, due to their scale, they can access more capital from the markets to invest heavily in R&D than eventually in manufacturing systems, robots, and new engineers that actually know how to make things like batteries and, say, software.
Well, I mean, Tesla's awfully well capitalized right now. North of $10 billion in cash on hand. They're growing their factory base, so we're not worried about their capitalization. In terms of some of the startups and the newer companies in the EV space versus some of the legacy platforms, it actually is quite difficult to make EVs. We saw that with Tesla's teething pains early on in its development. And we've seen it with folks like VW in specific with their operating system over the last couple of years. So we're expecting that the larger OEMs that are established are going to figure this out and will make vehicles. They still, I think, are disadvantaged from a performance perspective versus Tesla, as well as from a brand perspective, given the evolution of the technology. And again, that's why we think this Plaid was important for Tesla to get out into the public realm, because they are demonstrating a clear technology lead versus their peers, whether it's the established OEMs or some of the startups.
Colin is just such a breath of fresh air and competence among a sea of analysts covering Tesla who, on average, have no idea what they're talking about, and practically every time they open their mouths embarrass themselves. Now, this isn't to be disrespectful just for its own sake, but the truth is, the vast majority of analysts covering Tesla stock today are completely clueless, to the point where every time they open their mouths, they embarrass themselves, yet they don't realize it. However, in a few years' time, remember, the internet never forgets, some of the comments that they made previously will turn out to be some of the worst and most embarrassing things they've ever said in their career as a stock analyst. If anyone from Oppenheimer is watching, please encourage Colin to do as much media as possible. He's one of the few analysts that really gets Tesla and therefore Tesla stock. And as per his price target, $1,080 per share, that's about $470 from where we are today over the next 12 months. I won't be surprised if he hits the nail on the head. Let me know your thoughts in the comments below. What do you guys think about Colin Rusch in terms of his understanding of Tesla? Is there another analyst that understands the company even better than Colin? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you'd like up to $250 in free crypto bonuses with BlockFi, use the link in the description. You can also get 2 free stocks with WeBull and a free stock with Stake, also linked in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.